Big banks are quietly changing the way things are happening because earlier this year, the federal government changed the cash reporting threshold from 10 grand to just 200 bucks. And yes, this may not be happening at your specific local bank yet, but money services across the US, especially on the US and Mexican border, it's already been implemented. Money transmitter, currency exchange, check cashers are all being targeted. And I know what you're thinking, well, Nick, this doesn't really affect me, but you're absolutely wrong, because this was just a pilot program. And this is how things quietly get started. Targeted, small, quiet, it's the same story that goes back as old as time. Starts out small and then they expand. Think about it, the original $10,000 reporting rule started back in 1970. It hasn't been adjusted since then, and now, for the first time in over 50 years, the federal government has reduced that threshold and is magically having the eyes in your pocket. They could see practically everything, because if you're leaving the house at all, then you're probably spending 200 bucks. Gas, groceries, taking the kids to sports practice, and everything else. And this technology that they're quietly bringing to the surface isn't just for check cashing places and things on the border, but it's going to be put out for everyone. Personally, I've been in the credit and finance space for about a decade, and this is one of the biggest shifts I've seen in quite some time. With crypto, with banking, and everything else that's going on, reducing those threshold cash reporting requirements from 10 grand to 200 is a major step. So in this video, I'm going to break down what's happened, what's going to continue to happen, and how you could successfully navigate these waters to prevent from being locked out from your money, your credit, and to better suit your future. And real quick, I did want to say this has nothing to do with politics. I don't care if you love Trump, you hate him, or if you're somewhere in between. We're simply going to keep this based on facts and not totally on our political opinion. Starting off with what's actually happened based on concrete facts, and then we'll jump into how this is actually going to affect you. So in March of 2025, the FinCEN, which is the Financial Crimes Enforcement Network, basically the federal agency that oversees all of the financial monitoring under the Bank Secrecy Act. I know that's a lot of legal mumbo jumbo and jargon, basically the guys who are in control of all of this stuff. They issued something called a Geographic Targeting Order, or what's known as a GTO. This required all money service businesses, again, check cashers, money transmitter, currency exchangers, and a few more, within 30 specific zip codes around the US and Mexican border. I know, pretty fishy, to start reporting these transactions from $200 and above. In other words, businesses on the border of California and Texas, right by the Mexican border, they had to file what we call a currency transaction report on any transaction over 200 bucks. And if you think that's crazy, then you're probably right, because ever since 1970, the actual requirement threshold to report any sort of transaction like that, basically for the government to have their eyes on what you're spending, when and where, was at $10,000. Technically, I could understand that, because $10,000 isn't like, we're not leaving the house and spending that every single day, usually on a bigger transaction or something that requires some sort of tracing. That I get. But this order just dropped it to 200 bucks, which is technically a 98% reduction, which is gigantic. But here's the crazier part, because as we know, just because a rule has changed that says, hey, you need to do this now, doesn't mean everyone's going to comply. There were many lawsuits that were filed to help prevent this such reporting. So basically, I don't want to bore you, but there was a lot of back and forth on this order, and the courts basically said, yes, we agree that's unreasonable, and that's just an arbitrary number, $200. You need to be more specific, right? Why 200? What's actually the data behind this? Because like we said, it dropped 98% from 10 grand, so that's a big issue. So the courts did give some leeway, and the actual FinCEN and federal government came back with a revised order. So basically, last fall, the Financial Crime Enforcement Network, FinCEN, basically said, hey, we understand we'll work with you a little bit, but we're not going to totally give in. We'll drop the reporting from 200 to 1,000 bucks, but obviously they're going to want something in return. We're going to expand this to Arizona and more zip codes, because again, it's less about what they actually implemented in the past and what they're going to implement today, but it's more about the pattern. They want eyes on everything. This is changing. Banking is going to change forever, and you're going to hear more about it throughout the rest of this video. All that to say, the revised order is basically good until March 2026, which we're about 30 days out from that date, so it's going to be very interesting to see what happens. But here's the part that nobody is talking about. In December, FinCEN came forward and someone from the Treasury Department, Secretary Scott Bessent, hopefully I'm not throwing them under the bus, but based on what my sources here that are verified and fact-checked, is that FinCEN is building out what's called a data-driven border operation. Put the pieces together, people. Basically, they want eyes on everything, they want everything to be tracked, and they're going to be using AI and specific data to help them with this type of process. This has nothing to do with targeting certain businesses on the border anymore, but this is advanced analytical data tracking. So yes, technically the $10,000 rule might have not happened at your local bank yet, but the suspicious activity report that banks are allowed to use basically to flag a transaction did go from 10 grand to 2,000, and that's effective across the board. And to make matters even worse, the Bank Secrecy Act, basically banks don't have to tell you anything. If they flag your account and send a report out, they don't have to tell you. They don't have to tell you why you did it. In fact, you won't even know it's on their account until your bank gets shut down or you get spoken to about your account and questions about where you're spending money, why you're spending it, so on and so forth. So technically, if your card gets declined, then see you later. And remember, this isn't speculation, that was stuff that's already been implemented and that's what's currently happening. But this next thing we speak about is also already in law and it's a big change, so make sure to stick around in the video. And you're probably thinking, well, what the heck does this apply to? It applies to cash-funded transfers. Well, what does that mean? Basically, physical cash. They want to keep an eye on it. There's no more use cash and not be seen environment because that's the pattern that we're looking at. If you walk into a place with a physical cash, you walk into a place with a physical check, or you walk into a place with a cashier's check, they want it tracked and they want it taxed. Cool part is, if you send money with your debit, credit card, or a digital service like Wise or Remitly, technically it doesn't have any sort of tax, but guess what? It's tracked anyway, so they got what they want. But take a step out for a second. Think about who's actually walking into a check cashing place and using cash or a cashier's check or a physical check to send money to someone. It's usually people, and again, we're going to take the politics out of this, but it's usually people from immigrant families. I know back in college, I used to work and help out with a family friend that was in the construction business, and we had some people working with us that may not have been initially from this country, natively from the United States, and they were so kind enough that every time we got paid, they would take that money, they would bring it to a check cashing place and send it to their family that was located overseas. So I know for a fact that's what most people are doing from immigrant families, and that's who's quietly being targeted, which kind of sucks because those are the people that really can't afford much anyway, and now they're being taxed on what they send. In addition to whatever that they have to pay, because those places aren't cheap, right? If you walk into a check cashing place or to transfer money, they're charging a fee. It's the cost of doing business. So add the remittance tax and you're probably walking out with a decent bill just to send some cash. And you're probably thinking, well, at least it's some good revenue for the country. And yes, you were right about that part because the US, the remittance tax revenue is about 80 to 90 billion per year at the time of me recording this video. And the US-Mexico corridor alone accounts for over 60 billion. So it's very targeted and it's very aggregated to those specific areas because like I said, most people are sending money over to their family, or in maybe another case, there's something going on with money being sent places that it shouldn't be sent. Guess you're gonna stick around and find out. But now we're going to break down what you probably came to this video for, which is how this is going to affect normal families. Because billionaires, politicians, and people that have really high financial status, great, this isn't really going to impact them. But who it's really going to impact is the average everyday family. So let me paint you a picture. Remember the story when I was in college and I was helping out on the construction site and helping a family friend flip those houses? There was a lot of people that weren't natively from the US who, by the way, they did an awesome job and they were very good at what they did. But now in another case, let's take waiters, waitresses, people that are getting cash tips. This is also going to impact them. Gig workers, business owners who may deal primarily in cash. Let's say you're a barista at a local coffee shop, because we all know they love to get tips because it pops up on the little machine. Even though we can't stand it, we all probably give them something because at the end of the day, we appreciate their service. 100, 200, 300 bucks a week, they're putting their paycheck in the bank. This is all going to be flagged and this is also going to be tracked. So all these people getting away with these cash jobs and the cash society is quietly going to change. Again, to these people it looks normal because they're doing it every week, but to the bank's algorithm it's going to look like structuring, and it's going to make a flag in the system. Basically, it's going to be flag it and then review it later instead of review a large transaction and possibly flag it, so it's basically flipped on its head. And again, the big theme here is no notification, no explanation. Basically, you're just going to find out the hard way if your account is closed or if something is flagged after the fact. No explanation. But here is, to me, where it gets even crazier. They're not just going to look at your account, but they could look at anything that's linked to you. So your address, family members, everything else. Now they have an excuse, almost like a warrant, to look into all of this other stuff. Venmo, Zelle, helping your mom pay rent, helping your mom pay credit cards, blah, 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 blah. Everything is going to have a quiet eye on it. So cash, not only is it losing its value, but it's quietly going away. There's going to be no more cash system anymore. But here's the part that most people aren't connecting, and it's the real reason that I decided to make this video. Cash is not being banned, but it's going to be very hard to continue to use it. So what fills the gap when cash is getting squeezed? It's credit. So it's never been a better time and a more important time to build out your credit history and your credit score. And if you have bad credit or no credit, you're going to be hit with way higher fees, and it's going to be way harder to get approved for any sort of credit card or any sort of loan, especially if you're looking to establish yourself here in the US and you're not natively from here. I would highly recommend starting to build out your credit profile and really focusing on this for your future. So if your credit isn't where it needs to be, you have collections, charge-offs, late payments, or even a thin credit file, meaning you don't have much on your history, you need to fix that immediately, because the window to start building strong credit is closing faster than most people are going to realize. And to help you out, if you made it all the way to this point in the video, I'm going to offer you a free credit evaluation. Basically, I'm going to point out what's hurting your score, if anything, and the exact steps you could take today to increase your score to reach your desired goal. It's completely free for a small amount of people, and the link to book this will be pinned in the comment below. And if your credit is already where it needs to be, congratulations, and I appreciate you watching through to this video. And please, I invite everyone to drop a comment below. Do you think cash should stay private and we should operate the way that we have? Or should we track all of this stuff like the world is going to? And if you think it should be tracked or shouldn't be tracked, what should the threshold be? Should it stay 10 grand? Should it drop to 200? Should it stay at 1,000 where it currently is for the next month, or somewhere in between? And as always, make sure to subscribe to help you fix your credit, build your credit, and maximize your finances.